So as the sales side just said, that the markets, they don't expect to rebound. I'd just like to re-establish our position on this. The rubber prices have been reducing in the last 2 years actually. This is due to the excess supply which happened after the financial crisis. So the rubber market is directly correlated with the tyre markets. 70% of our revenue does come from car tyre markets. And if we look at the global car production, it's increasing 4% year on year, which is suggesting that the demand is going to pick up for us. And also that China and India, as they're becoming more prosperous, they're opting to go to purchase cars. And I'm doing this well. So China's Qingdao, about the oversupply that my colleague said, whatever he is, my buy side said, the stocks have just recently dropped below a threshold of 300,000 tons. And this is always a very good signal for the market. And it suggests that the market's going to pick up. And it's expected to grow at 5.9% over the next few years. Now onto our own valuation. We've actually valued it, and here's our assumptions. The sales growth is actually lower than that of our sell side at just 10%. And this is based on the rubber growth of 5.9% and also the growth of our plantations and the growth of our production plants internationally. The cost of goods sold are based on historical data, and you may notice they are actually reducing. And they're reducing because the company is becoming more efficient. As Nok said, the cost of goods sold was actually the cost of rubber was decreasing, which is directly negatively affects our company. However, our profits increased because internal efficiencies in SG&A expenses and other production techniques which we just recently installed. So here are our other assumptions, if you would like to check them all out. They're all very solid and quite low here. So our WACC is 12%, which some might say is a little bit high. But we would like to be conservative and choose to go for a high number, because if we lower the number, the valuation obviously increases quite significantly. The growth rate is very low at just 4%. The return on equity, the debt to equity ratio was currently 46%, but with the implementation of all of the new investments in property in the plantations and also in the production facilities, it will rise to 84%. However, it does not need to issue new equity, as the sell side said. We have a good capacity to raise 10-year bonds within the Thai bond market. So, by calculating all of the free cash flows to firm, as we do here, I don't need to explain the process, we all know. So the share price comes out to be 19.59% baht. The current price is actually 16 baht. No, 13.8 baht, sorry. So there's a 30% upside potential on this stock. 41%, sorry. So now, a couple of risks that we may see within this market. Most of our revenue is from foreign exchange in US dollars. So as the Thai baht appreciates, our revenues go down. However, the Thai baht recently saw a depreciation, and this is due to two key factors: a lower interest rate of 25 basis points and also a lower than expected Thai economic growth. Increasing cost of goods sold is actually covered through forward hedging, which we do quite often with our suppliers. We have a potential in the decline in price of finished products. However, the demand for latex gloves and other finished products are on the rise. Latex gloves, the prices are actually increasing. Next up, we can look at the economic factors. So actually, rubber is directly correlated with the economic growth of a country, of the global economy. And we see that it's expected to increase to 4%, which is an improvement over the last few years. Dividends yield of the company is 3.6%, which is actually the highest by far in the industry. People say we might have uncontrollable costs. However, time's up.